guys, this is Mommy Belluga Investing.
Hi there, back again with me Ratih in Mommy Belluga Investing. This time I will take an update of Sheng Siong performance since my last update in July 2021. So what happened since then? Does the company still grow? So my quick take for Sheng Siong after looking at their performance are the company seems to be still growing. The dividend yield is okay and pretty healthy payout ratio wise, but the current price is not really attractive for me. If you are not aware, I extracted data from companies' annual reports and post the analysis regularly in this channel. If you're interested in that sort of thing, please consider to subscribe. Disclaimer, this is an amateur video from and for my personal research. This video should not be regarded as a recommendation to sell or buy stock in the stock market. Sheng Siong Group Limited, with the stock symbol of OV8, is one of the grocery retailers in Singapore. Sheng Siong was established in 1985 and listed in SGX main board since August 2011. It was started as a family business and it still is. The top managements are held by the three founders, their spouses, and as well as their daughters and sons. Based on their 2021 reports, the largest shareholders is Sheng Siong Holdings Private Limited with around 29%. Other notable names are the three brothers of the founders. Each holds slightly more than 9% of ownership. Okay, now let's continue with the company's performance. So as usual, here are Sheng Siong's profitability updates since my last video. In 2021, Sheng Siong's EPS dropped a little due to the normalization of the supply chain. In 2022, this year, EPS has raised closer to the 2020 level. Also, since my last video, Sheng Siong added 2 more stores to 66 this year from 64 in 2021. Technically, Sheng Siong built 3 new stores this year as it closed down 1 store in the first half of 2022, so the net increase in the number of stores is 2. Profit contribution of each store stays the same, that is 0.1 cents EPS per store. Next, let's take a look at Sheng Siong's financial situations. To do that, I will take a look at its cash positions and compare them to the short-term liabilities and long-term liabilities. So here I plotted Sheng Siong's cash position as green vertical bars. I leave the 2022 data out for now as it is not the full year yet. We can see that 2021 cash was slightly lower than the 2020 cash position at around 250 million Singapore dollar. To see if this is a good or a bad or even dire situation, I'll need to combine it with other information. Here I added another layer of information, the current liabilities in purple bars. They are the liabilities that a company has to fulfill within 1 year. In most cases, Sheng Siong's cash position doesn't seem to be enough to cover their short-term liabilities except those in 2011 to 2015. We can see that the situation in 2020 and 2021 is relatively better compared to the financial situation between 2016 to 2019, when the current liabilities were higher than the cash positions. And for the sake of completeness, here I added the long-term liabilities as yellow transparent bars on top of the current liabilities. I can see that long-term liabilities of Sheng Siong spiked in 2020 and 2021. I haven't looked at them in details to know the composition of these long-term liabilities yet, so I'm not sure whether this will become issue in the future. All right, for now, let's take a look at the dividends situation. To review the dividend situation here, I make a composite plot with 4 layers of information. The first one is the dividend itself, the dollar amount of dividend per share, and their payout ratio. And finally, compare them against their earnings. Here I plotted again the company's EPS, and then we can see that the payout ratio have been declining sharply for the last 2 years. I guess Sheng Siong wants to conserve some cash for the ongoing growth. 33%, around 33% payout seems to be pretty healthy to me. Similarly, the yields have been declining as well. I'm not that happy with this dividend yield since I can get more from, for example, Singapore saving bond. But since the company seems to be growing, I may consider to add more positions if the current price is reasonable. For your information, I already bought a little bit of a share of this company right after my previous review in 2021. Okay, to see Sheng Siong's reasonable price, here as usual, I plotted 4 layers of information. The first one is the price itself, which represents market valuation of the company. But mind you, the price does not really indicate the company's fundamental. It's more of the market valuation of the company. The second layer of information is a 10 times earning multiplier, which here I plotted as dashed green line. 10 times earning multiplier can be considered as the price where price to earning, that is the PE ratio, is 10. For me, I consider 10 times earning multiplier has 2 purposes. First, it indicates the price where I have a higher chance to break even within 10 years. You may also plot 5 times earning multiplier if your investment horizon is only 5 years. Second, as a consequence for the first reason, I consider share price above 10 times earning multiplier to be expensive. The third layer of information is the 15 times earning multiplier. With the same principle as the 10 times earning multiplier, price above this indicator will be deemed as expensive, as a general rule. So here I plotted the 15 times earning multiplier as dashed yellow line, just like the traffic light. The fourth layer of information is a 20 times earning multiplier. Here I plotted as a dashed red line. I consider the share price to be super expensive if it ever crossed this line. For non-growth company, I consider to cut down my position if this happened. Okay, that was the general rule. Okay, now let's look at the Sheng Siong's share price. In general, we can see an uptrend in Sheng Siong's share price. The good thing is that the uptrend is supported by its fundamental, which is the increase in the company's earning. But if we look at closer, we can see some trend going on. Prior to 2015, the price hovers at around 15 times earning multiplier before it's slowly climbing around 20 times earning multiplier. Currently, the price seems to climb again towards 20 times earning multiplier after almost touching 15 times earning multiplier at the beginning of 2022. Okay, as of 19 August 2022, when this video was prepared, Sheng Siong stock price was at 1.62 Singapore dollar per share, which is around 80 times earning multiplier. It's close to its 20 times earning multiplier already. It will be better if I can get the share at 1.3 Singapore dollar, which is the price at 15 times earning multiplier. But considering the trend, I don't think that's possible in the near future. So for now, even if I'm rather interested in the company, I'll wait until the price is more reasonable to me, which is around its 15 times earning multiplier. Alright, now for conclusion. For now, I don't have intention to add position to Sheng Siong yet. The company seems to be growing, the dividend yield is okay, and pretty healthy payout ratio wise, but the current price unfortunately is not really attractive for me. I'll keep this company in view. I'll get back to Sheng Siong again pretty soon. Okay, if you find this content to be informative or interesting, please consider to support this channel by clicking the subscribe and also the like button. Appreciate your input to improve this channel through the comment section. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. And thanks for watching, and I'll see you again in my next video. Bye!